The fund invests in both physical gold and physical silver, but also in gold and silver mining equities. And the idea is to try and combine the best of bullion and the mining stocks which can do a little bit more for you within the portfolio. Our investment process is quite qualitative in as much as we don't seek to invest in all global mining equities, and we don't seek to invest in any kind of bullion. So what we like to think about is where are the risks and how can we avoid those, while also of course maximizing returns. And one of the principal ways we go about that is through geography. So we only invest in mining assets which are within the Americas and Australia. And the reason for that is because these are what we call tier 1 mining jurisdictions. So it's a blend of risk mitigation while obviously trying to maximize returns. Well, the risks of investing in gold and silver mining equities are myriad due to the very complicated nature of mining. And with that, of course, what you need to do is think about spreading the risk, both through jurisdictions and through a whole number of individual positions. That we manage through a very intensive integrated modelling process. So that's both financial and operating modelling, and also lots of meetings with companies. But of course, some mining projects do go wrong. Acts of God, geopolitical risk, there's all sorts of things that can go wrong. But it's a bottom-up, principally, investment process which helps us to manage that. ESG is an integrated part of investing in all mining. Unlike some parts of the equity market, whether or not you have your environmental licenses, whether you have social relationships taped down, and whether the governance of these businesses is good, is wholly integrated in the investment case. Because if it isn't, you can lose 100% of your equity investment. So by being in the right jurisdictions, that helps, but it's very much an integrated ESG process. The way that our fund can fit into an overall client portfolio is twofold. The principal way is as a form of diversification, because gold and silver move in an inverse fashion related to confidence in your local currency. So it's not to do with equities per se or fixed interest moves, it's to do with money. So there's a natural diversification that a fund like ours can offer, but also particularly due to supply-demand imbalance in silver, there is hopefully a money-making opportunity in investing in silver mining equities and our fund overall.